Okay guys, welcome to the FXTG educational webinar. Today we'll be discussing market discussions, pivots, resistance lines and support levels. We've discussed this topic before, however we'll be going a bit more in depth into it, and we'll also learn other things as we go along. So just a general advice disclaimer I've got to discuss with you guys. This is presentations aimed to be educational in nature and should not solely relied upon as a recommendation or invitation to enter into a particular transaction or to apply a particular trading strategy. You should not engage in trading unless you understand the nature of the relevant markets, the rules and applications of these rules, the strategy you are trading, the products, and the full extent of your exposure to the risk of financial loss. If you're in any doubt, you should seek professional advice. The advice contained on our site has been prepared without taking account of the objectives, financial situation or needs of any particular client, and because of that, the client should, before acting on advice, consider the appropriateness of the advice, having regard to the client objective financial situation needs, and you should know that ForexTG clients are required to read all product disclosure statements, and there's 3 in total. Okay, so welcome again, and why listen to me? Well, I'm a member of many Forex societies and I've been trading the markets over 12 years. It was 11 last year. I just briefly changed it now. I noticed that it was 12. I've traded with many professional traders and firms and others for the past 6 years. I've taken their lessons and been able to piece together some constantly profitable strategies. You guys asked for this is why I do it every Thursday. I have a gift for teaching and tuitioning. I love helping teaching people and have had great success in teaching and tuitioning in various ways throughout my life. Alright, what we'll talk about today, we'll discuss briefly in regards to pivots. We'll talk about supports and resistance. As I said before, we've touched on this topic before, but however, there'll be something here we can learn on. And at the end of this webinar, I'll appreciate if people want me to go into something else that I can research and put a webinar together. We'll see if there's any live trading orders we can do as well. And we'll talk about current market conditions. If anyone feels like having any questions, we can have an open discussion on it. So pivots and trading. Alright, so we all know we know that PP stands for a pivot point, which is like a balance, and S stands for a support, and R stands for resistance. So I'll show you here, like for example in the highlighter, this is a resistance level. Should a price break above this, it normally goes higher. A pivot point is where it's balanced in between. And also we have a support level, where should it break the support, we can see a drop in that as well. Sometimes supports do act for resistance levels. Okay. So here we got the British pound USD 15-minute chart. We can see there's a resistance over here that I've drawn, and we've got a pivot point line. So usually people try to trade in between the resistance and the pivot point line. We can see that it's dropped below the pivot point line, and we can see that over here on the S1, meaning support 1, we can see that it's holding off quite steadily. There's also a support 2 level, and there's also an S3 level, meaning how strong each level is. The higher the support number, like for instance S3, the deeper the support will be. If it's an R1, it's a weak resistance. Should it be an R3, it's a stronger resistance. Usually when you trade over a 4-hour chart, that's when you usually see an R3 or an R1 or an R2, sorry. And the same goes for support. When you see an S2 or an S3 is usually on a larger scale chart, I should say. Okay, so here's a calculation to calculate a pivot point. We got high plus low plus close divided by 3. So when we're discussing a high plus low plus close, I just want to show you how it's calculated, and depending on your chart, so looking at this this chart, so you look at a high plus low, and the way you get your high plus low is simply on your MetaTrader. You can see your high here and you can see your low. We've got it calculated for a 15-minute chart, so that's how you would do your calculation on this. So I'll go back to the pivot point line. So pivot point is simple: high plus low plus close divided by 3, you get your pivot point line. Support and resistance levels are then calculated off the pivot point line like so. First level support and resistance is first resistance R1 equals 2 times PP take away low. Now I know it looks a bit confusing. I'm going to leave this up here for about 30 seconds so you guys can jot it down quite quickly. And I'm going to show you a method that I use that is much easier to calculate a support and resistance level. I don't usually use pivot lines. I do use resistance and support levels, which I do want to show you guys how I calculate them. And I calculate it in a more of a fundamental way. So I'll leave this calculation briefly there for you. Okay. So in simple terms, when we look at a 15-minute chart, let's take the AUD USD for the time being. We can see current price action in 15 minutes. How I usually put a support level is I look at a bottom. So I see that this here, I can see it's a double bottoms have reached here. A brief head and shoulders, not too much, has occurred. So that would be definitely a resistance line, a support line, sorry. And I would then look at the next high being a resistance line. So in hindsight, this here would be my R1 being resistance one, and this would be my support one. So R1 and support one. Also, I know it looks easier than what you think, just dropping down a line. However, when you pull up a chart, you'll be able to see this. Just to also show you that you do also have another line here. This could be your support 2 line. And the reason why I do it by this method and not via calculation is simple. The market doesn't go by calculations. If the market went by calculation and mathematically like calculation, it would be so easy to pick. That's why market these days is so hard to pick and understand what's going on. So it's that's why I do it by a view of when I see it, I know where to put my lines, and this just comes out of time and practice. So just practice and learn how to place your support, and you'll see that once these lines start working, that they'll start to break. Okay, so and I'll just draw it up again. So here, this will be a support 2, support 1, and R1. My next resistance level would probably be possibly around here. This would probably be an R2, and obviously resistance level R3. If I had to drop lines, will be there. Okay. Should this trade here, see the green bit over here, this bullish bar, should this reverse and clock down the other ways, we should see it hit another support again, or double bottom, and hitting our S2 line. Does anyone have any questions in regards to this and how I've picked it? Would you like me to do it on another chart? I should do it on another chart. Just we'll pull up a Euro USD. Okay, this is a great chart to actually do it on. So Euro USD, if I had to draw a pivot, I would say the pivot would be quite center. Okay, if I had to put a resistance line, I would say this is a resistance line level right here. And if I had to put a support, this would be another support. And if I had to put S2, I would say S2 will be right over here. So should the euro break 1,300, we could see further downside to the euro. In doing this, I also want to do an add-on that is really going to help you guys understand this. So this is an R1. This is a pivot point. This is a support 1, and this is a support 2 line. Should this trade here, this bearish bar reverse, go below the S2, we would see further downslides. Not just in looking at that, however, we also have an indicator called a channel indicator, and you can see that it is channeling down. So there is definitely a strong downtrend. We can definitely see a strong downtrend in the euro occurring just over here. So a strong downtrend. Should it break the 1,300 level, we could possibly see further downtrends on the euro. Okay, I'll do it on one more pair so we can clarify how this works. And I want to have one that works where it's on the resistance line so we can actually put an order and see how it trends. Now the same rule goes with these kind of orders when you're trading a breakout, okay, or when you're trading a breakout to a short side or a breakout to a long side, depending on the time frame. So on a 15-minute chart, I usually put a take profit of 12 pips and a stop loss of about 35 pips plus spread. That's my my kind of analogy that I use on these types of methods of trading. And I'll just pull up one more chart and we can have a look at that. This is a gold chart. Why do I have this here? I think I might have an open position on a demo account. Let's just have a look. No, I don't. Okay, I've just put a bid and ask line. That's why we're seeing that red there. I'll remove that bid and ask line not to confuse us. So we're looking at gold at the moment. Just looking at the gold chart on a 15-minute, I can definitely see a downtrend occurring when I pull up my channel chart. Okay, I would then draw my resistance lines, so I can see there's a support line here. I can see another support over here, and this is actually a pretty good support. I can see a resistance there, nice flat resistance, and I'll show you in a minute. I'll draw it up, and I can see another resistance over here. And the way that I'll show you is like this. We can see over here resistance, it's doubled up, it's flat, been a lot of price action in there. So this will be a resistance 2, this is a resistance 1. The resistance 1 is very strong at the moment. It looks quite stronger than the resistance 2. Okay, so it must be a fundamental level there too. Looking at the downtrend, we can see a support 1 that has been broken, which is this line here. So before this occurred, we can see that the support 1 here was broken and it dropped. Okay, support 1 was drawn up because of this here, and also was in line over here. So usually to build a resistance or support line, you need to have some sort of flat volume where the market's built formed a bottom, it's called. So we can see it's formed a bottom over here. It technically doesn't mean that the market's dropped and it's bottomed out. Forming a bottom means it's formed some sort of resistance line. So over here it's formed a line. Over here it's formed a line. So this is when the price action goes quiet for a while. So should support 2, which is this red line here, be broken, should the green go below the support 2, we can see further downside slides in gold. And at the current conditions where the euros are sliding down, gold is looks like it's due to follow due to the current economic crisis in Greece and the market uncertainty with the Eurozone. So back in the days, people used to be the first thing to pound on was gold when some sort of market crisis occurred. Now gold is not too much risk averse as a commodity as it used to be. The reason for that, it's been very bullish. You know, back in the days when gold used to trade at $200 to $400 an ounce, you know, it's nearly hit 2,000 and it's gone all the way down to 1700s and 1500s. So gold is still a very bullish commodity, and a lot of traders trade it. So the thing is, a lot of traders get freaked out when something happens in the market, and they go out. They go out of gold as well. So that's why you see those downslides in gold. Fundamentally, gold should be going up when there's a crisis. The reason why is gold is it's the world currency. When you say it's the world currency, if I go to, I've got Australian dollars now, let's say, touch wood that Japan's in war, and I go with my Australian dollar to Japan to exchange it, my Australian dollar's worth nothing. They won't exchange it. However, if you've got gold, every country accepts gold. It's a global currency. So if that makes any sense to you. But then looking at gold, and then you look at like a pair like Australian dollar, which is also trending down. So it kind of tells you that on a 15-minute chart, that's the Australian dollar, and that's gold. It looks very, very similar. It looks like I've pulled up the same pair. They're both trading down. Any questions in regards to that, guys? No questions? Or any questions in particular to anything that you want to discuss? Okay. All right. That's good. Now, just going back to these types of methods, we can place specific orders when we see resistance and support lines, and the rule of thumb that I use is +5, I call it. And why I call it +5? Okay, let's have a look at gold, for instance. So we see a downtrend in gold. Okay, we know that if it's going to break 1718, there's going to be further downslides. Now, gold's not really a good example to do it with because it's better to do it with currencies. But what I do is, if this was a pound USD, for instance, I'd put a +5 sell on it. And what I mean by +5, we'll actually do it on a pound USD, for instance. Let me remove these indicators. I'll draw up a quick support and resistance lines on this, so we can see that there is a resistance here. We can see support line here. Okay, so I will show you exactly what I mean. This is a resistance 1 line, guys. This is a support line. Pivot line is right here in the middle. It's pivoting right in the middle. Okay, so should this order break, it nearly did, should this order break, what I do is I put a +5 and I go long. And I go out, I take my profit on 8 pips from my order. Stop loss, I probably put a 25 pip stop loss on these types of orders. Okay, so how these orders work is simple. To draw up your +5, what we use is a crosshair. So I'll grab the crosshair and I'll see that the current price is 156.85, so I'll say 156.90, 91. So 156.91, there we go. I will put a long order here. So at pending order 1.5691 buy limit. It's not letting me do 156.91 for some reason. $156.91. It might be within a certain range of 5 pips. I'm pretty sure if I put an order at a larger amount, 156.56, let's say 99. Yeah, it needs to be a larger order. That's all it is. But that's all right. We don't have to sit there and if the system won't let you execute that type of order, all you do is you can just sit there and you can wait. You can sit there and wait until it increases to 156.91. When you sit it, you can just do a market order if you like. If you're off by 1 or 2 pips, it's not a big drama. As long as you make it up for it when you get out, you deduct the 1 or 2 pips. So if you got filled at 156.92 and you're making 8 pips on it, so 92, obviously you're going to get out at 157 flat. That's how it would work. So sometimes it's more exciting to actually put an order than yourself. Market execution, instant execution, than do an order with a limit. I guess you get more involved in the market. You feel like you're more alive. So there's one you can do for you. Anyone else have any questions in regards to market orders or picking trends? Okay. All right. Now I want to talk about parabolic SARs. It wasn't a topic today. However, I am going to discuss it, and it's one of the reasons why we can use this in these types of orders. A parabolic SAR looks like this. You just drag and drop it from your indicators on your MT4, and it works quite simple. How it works is if you see 3 in a row, so you see 3 up, you go long. If you see 3 going down above you, you go short, or you close position. This is another confirmation if a support or resistance line is going to be broken. You can see it. So in this case, if we see that it is broken, that we see the 156.91 has been triggered, and we still see current 1, 2, 3 dots occurring, we can still go long. Okay? Should we see that this get broken and we see the first dot, I wouldn't be too cautious entering. Now also, I didn't quite show you guys that on the bottom here we have volumes, and I just want to show you how I put the volumes there. And the way that I do it is I right click on the chart and I go to volume, and I can see the volume bars here. I don't usually go into a flat market. I usually go when I see high volume bars have increased. Same with the resistance or support level. If it's going to be a flat market and it's broken at some sort of resistance or support level, it's a fake out. It's not a real resistance or support level. To break a real resistance or support level, you'll need very strong volume, or you'll need medium to average volume. You won't be able to just break a support level with a flat market, or I call it a bed because it's flat like a bed. You won't be able to break a market with a bed. You actually need these types of occurrences to occur. Peter has asked a question that said, what type of indicator is this and where do I find it? Simple, Peter. Where you find it is when you go to your MT4 platform, you've got a picture of a little man there. That's meant to be you or me. Click on indicators and you'll have all your indicators here, and you just grab, drag, and you drop. It's quite simple. So I'll do it on an AUD chart. All you do is you drag Parabolic SAR. That's the one I was discussing. So how the Parabolic SAR works like this, Peter, I'll show you. You see over here, you see 1, 2, 3 dots occur. You go long on the next candle, and you keep going along. And as soon as you see 1, 2, 3 occur, you close out. 1, 2, 3, you go long. 1, 2, 3, close out. Try not to trade during fundamental news analysis or some sort of news release when these occur. You can also grab these types of charts, Peter, and everyone in the room. You can also grab it from inserts, indicators. They'll be over here too. So volumes, you got heaps of stuff here. You got custom indicators. You got everything's here that you need. You got your MACD, which is a popular one as well. I'm not a big MACD fan. I haven't been a big MACD fan at the moment. I've been using more moving averages and other indicators. I'm finding that it works better in these types of markets. When a MACD, the momentum isn't quite it's quite choppy at the moment. It's not a clear signal. So I've been using more moving averages and Parabolic SARs and these type of markets. I think it's good to be transparent and be able to move yourself in these types of markets as well. Anyone else have any questions in regards to indicators? Any indicators you want that we can use with this? There is a few. I've got my favorite indicator that I've showed you guys several times, and I've actually I've saved it as a template, Stavro. So what I use 2 moving averages. I change the color. One on 21, the other one's on 9, and I will show you quickly how I drop that. What I do is I go to moving average, I drag, I put one on 9, I ensure shift is 0, and then I put another moving average, the other one on 21. Let's make it a yellow, just separate the color. When I see the crossover occur, so I see, and now what I'll do is I've just got a great idea actually. I'm going to show you guys. When you see the yellow cross the blue and the blue cross the yellow here, you see that it's an uptrend. You can also confirm the uptrend with a channel if you like. So you can grab a channel here, and you can also see that the uptrends occurred. Okay, so you know that's an uptrend. You can also add on your Parabolic SARs, and you can see there was 3 that occurred. Then you see 1, 2, 3. You've gone long, and in hindsight to all that, you can also put your support and resistance lines on. So you know that there that I've just put that line on the bottom, that would be a support line. You would see another support over here, and you would have a resistance and a resistance. So let's say this never happened. That's what it would look like. It's such a messy chart. Okay. I've got another question here from Colin. He said he's been trading with Bollingers, and how you actually find the Bollinger Bands there, Colin? They're working well for you? Were you trading with Bollingers because we did the last topic on Bollinger Bands? Good buying out of the squeeze. Yeah. This is a good example here with a Bollinger. You can see there's been a bit of a squeeze here, and then it's done a nice little breakout and selling out of. Yeah, yep, definitely. And with the Bollingers there, Colin, just to let you know, um, you can also put a parabolic SAR on. Um, that would help you with your Bollinger Bands as well. They tend to help. They some indicators work with each other and they give you an extra confirmation, whilst other indicators don't. Remember, an indicator is there to show you 70% accuracy. Okay, so don't rely too much on them, but it's there. The more indicators you have that you can understand and know what's happening, the better your chances are going to be in the market. The less indicators you have, the harder it's going to be to make a decision as well. Anyone else have any questions in regards to Parabolic SARs or anything in particular? No other questions? Okay, I'll wait a few more minutes. Alrighty. Well, is there any other specific topic you guys want to discuss in the next webinar that we can go into? Anything that's bothering you or something you want to know about that I can research and get onto you with it? In particular? I was thinking of doing Fibonacci's as a topic, or an Elliott wave. Fibs would be great. Yeah, alright. I think I'm going to do a topic on Fibonacci's. We'll talk about Fibonacci levels and how it works in fundamental levels as well during news assessments, because that's a good time as well. Fibonacci is a great resistance level too. Okay. Alright, so next topic we'll discuss Fibonacci's. I'll go into detail with it. We'll do a good webinar on it, and we'll take it from there. So if you guys have any further questions, please let me know. Otherwise, I'll see you next Thursday. Okay, and have a great time. Thank you all. Good night.